Hi, today I'm going to be looking at VFD Group FY25 earnings forecast and my 1 year target price for the firm. Now, about the firm, VFD Group was incorporated 7 July 2009, so it's a fairly young company. I mean, 2009 till date, that's about what, 16 years or so. Yeah. So we actually company turned 16 years a few days ago. Commenced operation at least was registered 16 years ago. Commenced operations December 2010, um, and then became a listed company, I think sometime in 2019, if memory serves me correct. So the name moved from Vadas to VFD Group Limited and ultimately VFD Group PLC. So what do they do? Principal activity of the firm is, in essence, is an investment company. In my view, they are largely focused on, or they subsidiary companies they have slash associate companies largely play around the financial services space. So you have the likes of, I think, Ancoria Asset Management, Ancoria Securities. They have a stake, I believe. I think they still do. Should still have a stake in Abbey Mortgage and the like. So clearly, what they do is mostly around financial services, while subsidiaries cover real estate and hospitality, logistics and haulage, lending, and tech services. Um, Here's my forecast for FY 2025, and I've done a bit of mathematical rigmarole. So if you're not mathematically inclined, please bear with me. And Q1 2025 profit after tax actual 3.4. My estimate, assuming that you multiply Q1 by 2, you get 6.9. Luckily, the company gives us Q3 forecast 2.6. Now my estimate is that if you take that and you multiply that by 2, you get 5.3. So you add up H1 and H2, and that should give you 12.3 billion. Outstanding shares, number of shares issued by the firm, 7.6. FY 2025 earnings per share forecast is 1.63. Now, current price, 14.5. PE ratio at current price, 8.8 times earnings, meaning investors are, if they're buying at its current price, are paying 8.8 times the company's profit per share. Target price for me, if you're going to use this method, would be 16 naira and 30 kobo. So you might say possible upside is 12.44. Now, the reason why I have a buy view, and I'll explain in the next slide, is that if you go by DDM valuation, then you would assume that um, this stock should be trading much higher. And so I have my DDM valuation, and I'll show you a few loopholes. It once I'm done running you through the valuation. Now FY24 dividend was 2 naira and 50 kobo. Dividend growth rate, I'm estimating 10%. Required rates of return are 20%. Obviously, now for dividend discount model to work, your required rate of return has to be higher than your dividend growth rate, else it renders the model invalid. So you work out your numbers, you have your expected dividends divided by R minus G and all that. And so that gives me 25.2. Now, if you were observant, and I believe you were, and I'll just go back to the previous slide, if my estimate per forecast earnings per share estimate is 1.63, it therefore would render um, the dividend discount model kind of difficult to work with, because you would assume you can't pay out more than your earnings, except you're going to be dipping into beyond retained earnings or beyond the profit you're going to make. So if you assume that profit per share for the full year is 1.63, are they going to be willing to dip into profit? So that's my conundrum. And I mean, the last model to use, and I was pressed for time, I just didn't have the time, would do to say, let me run a discounted cash flow model. But as you know, if you're someone who's followed my videos for a while, I'm not really a fan of discounted cash flows, because I think most of the Nigerian setting, and because this is in some ways you can essentially refer to VFD as a whole co. I don't think that I'm not really a fan of cash flow models. I mean, cash flow models are great when you have companies, I would say, that are unit focused in terms of operations and all that. But really, I just don't like that model. So I use it occasionally when I'm kind of confused or I'm not clear, going by the valuations of P and DDM and the likes. But clearly, and that's why I have it unknown here that look, Q1 retained earnings actual 17.8. If you assume that full year earnings is going to be somewhere between 25 to 30 billion, if they're just going to maintain the estimated dividend, which is about 2 naira and 50 kopan of fraction, that will amount to almost 20 billion. So the question is, and I don't think they are, is this company going to be willing to pay out over 50% of retained earnings? I don't think they'll do so because, and my candid thoughts are probably that this firm also with all the happenings across financial services space, I think that it's very possible that they may want to expand operations. So in that case, you wouldn't be paying out such a huge chunk. So that's the conundrum that I have with this firm. DDM says it should be trading higher, but DDM works if you're going to maintain that dividend. Now, if you're going to pay less than that, and I wish I was using Excel because it's easier to twist the numbers and you can get it, then it wouldn't work. So the last option would be to say, look, let's blend um, DDM valuation and blend PE valuation. So DDM valuation is 25.2, P valuation 16.3, 25 plus 16 gives 41, divided by 2, that gives 20, which in my mind, I think it's a fair estimate. So I hope you found this useful. Do let me know. And as always, do your own research. This is not trading or investment advice. These are just my thoughts. Thoughts are subject to change at any point in time. Before you go, please like, share, subscribe. As content across everywhere, the podcast, the Green Ticker Tales website, the Twitter handle, TikTok. I'm working on a couple of things for TikTok, my own TikTok channel. So have yourselves a good day ahead and see you in tomorrow's pre-market video.